Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. Excitement tinged with sadness, we must say, as the greatest investor of all time, someone who's certainly been an inspiration for you and I, has finally achieved FIRE. And is hanging up the investing boots at the age of 94 years old. Warren Buffett, the legend that he is, he's going to enjoy his well-earned retirement now.
Yeah, well, I think he's still going to be sticking around. He's still going to be chairman.
Oh, yeah. So not fully, he hasn't fully achieved FIRE. But we're going to talk about Warren Buffett, what his retirement means, and some of the most important lessons that we've learned from him that we think are applicable to all investors. In today's episode. We're also going to be covering off the news, and we're going to close out by answering a question around the tools and resources that we find most helpful for our personal investing. So another jam-packed episode. Bryce, let's get into it.
News and markets.
So to kick off, we're going to cover what's going on in the market, both here in Australia and overseas. Have a look at some of the earnings that are coming through for some of the big tech companies, and close out with more disastrous news for Tesla, which always makes me feel good. So let's start with So let's start with the news here at home. Markets are back, Ren.
Yeah, never left.
Markets never left. If you blinked, you would have missed it. We've had a pretty incredible run here in Australia and in the US. The Australian market had 7 up days in a row.
Yeah.
The US market did 2 better and had 9 up days in a row.
Yeah, best streak since 2004.
Best streak since 2004. The at the time of recording, the ASX is up since since the Liberation Day.
Yes, and the US, the S&P 500 briefly ticked up. It was up for about a day from where it was on the 2nd of April, fell back down. But yeah, they basically have got back, well, the US has got back all of its losses from Liberation Day. It's still down from its recent high, but this year it's down 4% year to date. A lot of headlines to be down 4%.
I know.
And in the past 12 months, it's still up 9%.
Incredible.
So just a reminder to reflect on the headlines that were coming out a few weeks ago. We might do some content around some of those headlines from a few weeks ago. And just remind yourself about the sensationalism of the media and the resilience of the stock market.
Yes, how good. So we'll keep moving. Earnings continue to come out from the US. We've seen some pretty incredible results from Microsoft and Meta, but that continued with Apple and Amazon reporting last week, both beating estimates on Wall Street. Apple's earnings per share was up 8%, and Amazon's was up a whopping 62%. As I said, we've had Alphabet, Microsoft, Apple, Meta, and Amazon all beating estimates in reporting season. So it just goes to show big tech keeps getting bigger, Ren.
Yeah, I think all of their share prices would be down this year.
Yeah.
But all of their profits grew year on year, some pretty phenomenally. You said Amazon's earnings per share up 62%. Alphabet's earnings were up about 40-something% year on year. Their profit was up 40-something% year on year. So big tech keeps getting bigger. That is the takeaway. They're all reporting pretty wild profit margins. One takeaway that I had from Apple's earnings report, Tim Cook estimated for the next quarter, for the next 3 months, tariffs would cost $900 million for Apple.
For the next quarter?
Yeah, just for the next 3 months.
Wow. Pretty solid. I mean, it's definitely better than the initial assumption, which was that it's going to cost them $40 billion or something.
Was that an assumption?
Yeah, remember it came out that it was like their total annual profit was like 90 billion or whatever it is. They were going to be slugged at its peak before all of these concessions came in.
Yeah.
Something, I'm pretty sure it was 40 billion.
Yeah, okay. Well, that is, I agree. That's certainly better.
Yeah.
But one smaller tech company that reported that was particularly interesting was Reddit. And for me, this was a story of how the market reacts violently to things that are said. Well, good news and bad news stories. So Reddit reported after hours, so after the market closed, but there's after hours trading, so share prices keep moving and you can track them. Reddit came out and said revenue was up 61% year on year to $392 million for the quarter. Share price jumped 19% in after hours trading. But then the Reddit CEO kept talking.
Keep it down.
And he explained that Reddit, a lot of their traffic comes from Google searches, and that they are concerned about the impact of AI on Google searches, and particularly Google's AI overview, which they're worried is going to reduce traffic. And in test markets where AI overview is happening, Reddit has seen traffic reduce.
Wow.
And just like that, the share price fell, and you can see it up 19%, down all the way back. And it was actually down about 4%. And then as the market opened and traded the next day, it stayed down about 4% for the day.
Wow. There you go.
Yeah.
That's what a wild ride. It just brings me back to this whole Google thing as well. Like Google themselves having that overview are kind of killing themselves.
Well, their view would be like the most important thing at a time like this is just to keep market share in search.
Traffic.
Yeah. But it is interesting. Like if Reddit are seeing the traffic impact, that is a sign that the Google thesis, like the thesis that people have around Google losing revenue from search, like that literally is playing out.
Yeah.
Which is tough because I'm a Google shareholder.
I am a Google shareholder as well, but I'm definitely spending a lot of time thinking about it because it could be, I mean, this is where you really got to pay a close attention to earnings because it could be a slow grind down. Grind down.
Look,
anyway.
put it this way. If Google's growing profit at 46% year on year, I'm in for the ride.
Yeah. Well, it's just how fast can they transition to other things.
But speaking of rides, another company that has been on an absolute ride, mainly a slide more than a ride.
Wheels are off.
Has been Tesla.
Yeah, Tesla vehicle sales have slumped 76% here in Australia in April alone compared to 1 year ago. They continue to lose market share to the Chinese competitor BYD, which outsold it by more than 6 times here in Australia.
So let's put some hard numbers to it because they're not massive numbers. So in April, Tesla, there were 500 Teslas sold in Australia.
Is that all?
Yeah, which in April last year, 2,077 Teslas sold. So we're not talking huge numbers, but that is a 76% fall year on year. For the year so far, so year to date to the end of April, 5,660 Teslas sold in Australia.
Okay.
So you can also see how small April is compared to the 4 months
bigger.
there.
Yeah.
But that number is down 62% from the same period last year. So Tesla sales are falling. But as you said, BYD, 6x what Tesla sold in April. They sold 3,207 vehicles in April in Australia.
If I was just going to do my own sort of back of the envelope survey, I could tell you something similar because the number of BYDs on the road versus Tesla is crazy.
Here's my metric. What Ubers am I getting?
All BYD.
Because I reckon last year a lot of it was Teslas.
Yeah.
Now it's all BYD. Or a lot of it is BYDs.
Yeah, absolutely.
And look, this is a story that's playing out around the world. So in April, sales in Sweden for Tesla down 81%. In Spain, down 36%. Like this is a problem for Tesla.
It is a big problem for Tesla.
And like a lot of it is tied to people's feelings around Elon Musk.
Yeah.
And whether you love him or you hate him, it's probably going to determine whether you buy one of his cars. And unfortunately for him, the people that are most predisposed to buy electric cars don't like him. And the people that are least likely to buy electric cars do like him.
Yeah. Bit of a conundrum for old Elon. Fascinating story coming out a couple of weeks ago as well, that the board started the process of just tapping some executive search allegedly teams on the shoulder to understand who else might be out there to replace Elon. Now, as they came out pretty strongly and said that didn't happen, I feel like these stories aren't just made up out of thin air.
Well, the Wall Street Journal reported it,
Yeah.
and then Tesla board denied it. But you would think the Wall Street Journal would.
They're not just making up stories.
Well, they're not.
They're not. No.
Yeah.
You're saying someone who leaked it might be.
No, well, I'm saying there are other media outlets that may
Oh yeah.
not have sourced it as well. But yeah.
But fascinating what's happening.
And if you want to keep up to date with the news moving markets, make sure you sign up to the Equity Mates Daily newsletter, 6 a.m. in your inbox every weekday morning, a dot point summary of the news you need to know. We also turn it into a podcast using AI, headlines by Equity Mates.
Warren Buffett announced that he would retire at the end of 2025 and hand over the reins of the trillion-dollar company that he has built. Here's the most important lessons that we've learned from the greatest investor of all time.
Yes, love it. We were lucky enough to see Warren Buffett in
What an
Omaha a couple of years ago, and
Yeah.
Charlie Munger. We shouldn't sell his influence short.
No way.
But he truly is the greatest investor of all time. I think, I was about to say in our opinion, but I think the numbers back it up. So he returned 5,500,000% in 60 years.
Yeah, it's incredible.
He bought a failing textile mill in 1965. And at this stage, the Buffett partnership had been, it had existed for almost a decade. And some of his best years were actually before Berkshire Hathaway. But in 1965, he buys Berkshire Hathaway, a failing textile mill, turns it into his holding company, becomes an insurance conglomerate, becomes a diversified holding company, becomes $1 trillion company in 60 years.
Yeah.
Pretty amazing story. That works out to about 20% a year compounded over 60 years. And that makes him the fourth or fifth richest person in the world, depending on when you look, worth about $170 billion.
And just to contextualize those numbers, 5.5 million% over 60 years, the S&P 500 has done 39,000%.
Okay.
Which equates to a 10% annual return.
Yeah.
So incredible outperformance over 60 years.
Yeah.
I mean,
pretty
an
amazing.
outlier for sure.
So at the 2025 annual general meeting that was held last weekend in Omaha, Nebraska, Buffett announced that he'd be looking to hand over the reins by the end of the year, leave the company as CEO and remain chairman, but pass it on to the next generation. I think fair enough. He's 94, turning 95.
Yeah, it's incredible. So we're going to take the opportunity to go through some of the key lessons that we've learned from Warren Buffett, Ren, and there's so many to choose from, but today we've got 3, and then we'll close with a bit about Greg Abel himself.
So the first one, buy and hold and buy some more. And I think this lesson is particularly pertinent given what we're living through in the market now. But if you look back on Buffett's life, he lived through 15 recessions. And counting. He might be able to notch up his 16th this year. Yeah. So for those keeping score, 1929 to 33, 37 and 38, 45, 49, 53, 58, 60 and 61, 69 and 70, 73, 75, 80, 81, 82, 90, 91, 2001, the GFC, COVID, and now potentially that was 15. And now potentially the 16. Yeah. And like those recessions had massive impacts on Buffett's wealth. The stock market crashed and we can zoom in and sort of see from his net wealth how they affected it. 1973, by that stage he had a fortune of $34 million. But with 73 came the oil crisis, came high inflation, high unemployment. America suffered its worst economic crisis since the Second World War. He lost half of his wealth. From 34 million in 1973, he was down to 19 million in 1974.
Damn.
But this is a lesson that we want to reinforce over and over again. Buy and hold, buy some more, buy the dip, wait it out. There's never been a dip you shouldn't have bought, because by 1977, his net wealth was back up at 67 million. It was more than double where it was before the recession.
Love that. Well, that's not the only instance. If we fast forward 50 years, Ren, the same lesson is repeated during the COVID crash of 2020. Much older, much wiser. Buffett, by this point, was worth a whopping $82 billion in 2019. There's the effect of compounding for you. Coronavirus came, stock market crashed in March of 2020, and it was actually his 90th birthday. So not the best birthday present, because his net worth was down to 67 billion, wiping some 20 billion. But as he lived through many of these crashes before, he did so again in 2020. Stock market recovered, so did his portfolio, and by 2021, Buffett was back up and above what he was before coronavirus hit, worth $96 billion.
Yeah, so we've said it before, we're going to say it again. The stock market has this just relentless grind upwards. The market crash is front page news. The recovery is covered in the business sections and on Equity Mates Investing podcast.
Yes.
But that is the first lesson that you need to know.
Lesson number 2 is you don't need to find unknown names. Warren Buffett's story is not a story of finding those obscure small cap stocks and letting them run. His portfolio are those household names: Coca-Cola, Apple, American Express, Washington Post, Geico. These are companies that are household names that are staring you right in the face, and you don't need to be worried about finding the hidden gem.
Yeah, and I think it's really important to stress when he bought them, they were household names as well. I mean, the most recent example is Apple. And it's crazy that from a return point of view, one of his best investments was just buying Apple in 2016 and holding it for a decade.
Yeah.
Like we all saw it. We all knew about iPhones at that point. But, you know, Coca-Cola was a massive company by the time Buffett was buying it. American Express was known. Washington Post was one of the major newspapers. I think that is just a lesson that we need to keep reminding ourselves, because the sentiment, the feeling that we all have is this company is well known and the value has already been realized. It's already priced in. But the lesson from Buffett is that the way that you make real money long-term in the stock market is finding those companies that will continue to create more value. It's never about the value that they have in that moment when you're buying them. It's about what they do with the profits they make as they, you know, create new products, expand into new markets, hire the smartest people to keep growing. Backing that innovation and finding those companies that will continue to innovate. And so it's never about what the value is today. It's about what the value they'll create once you own them.
Absolutely. I mean, the Magnificent Seven has been that's the exact story over the last decade as well. Lesson number 3 is the effects of compounding are seen later in life. I mean, it's pretty obvious, but Buffett's story is the best illustration of long-term compounding and the effects that can really have on your wealth, and how that final sort of stage of that compounding is where the wealth is truly built.
Yeah. 99% of Buffett's wealth came after the age of 50. Growing your wealth is not linear. And like the numbers that we all put up in our lifetime won't be Buffett numbers.
Speak for yourself.
Dollar cost averaging into a core portfolio of index funds won't get us to $170 billion.
No.
But the chart will look very similar in that the effects of compounding come in the out years, and that, you know, 99% of our wealth, or a big chunk of our wealth, will come after the age of 50.
Yes.
So for Buffett, by the age of 50, and remember at this point, you know, he'd been investing since age 11.
Killing it.
He'd been it worked for Benjamin Graham. He had done the Buffett partnership. He had bought Berkshire Hathaway and turned that into his holding company and started that growth journey. He was killing it.
Yeah.
He was worth $100 million.
Yeah.
But at age 50. Today he's worth $170 billion.
Yeah.
So it's actually like 99% of his wealth came after the age of 50. And that is why, like, people often interrupt the effect of compounding too early. And it's, you know, it's somewhat boring to just keep saying it. Like, just keep buying, buy and hold, dollar cost average in, let the market do its thing. But this is why. Because it happens over decades. But what happens is so powerful.
Don't stop. I mean, I think about the effect of this on everyone who has been fortunate enough, unlike sort of the baby boomer generation, to have a superannuation account from 16 years old when they start
Yeah,
working.
yeah.
That, the effect that that's going to have over 40 years is going to be phenomenal, and people will really see that, if anything, through the super funds. So, yeah, big lesson. If you ever want to show someone the impact of compounding, you're trying to convince them, drag out the story of Buffett, because there's no better illustration.
Yeah. So let's close out by just talking about what happens next for Berkshire Hathaway, because a number of people are shareholders. I mean, if you own the S&P 500 index fund, Berkshire Hathaway is one of the big holdings there. So Buffett is stepping down, and he's named Greg Abel as his successor. Now, Greg has been in the succession plan for a while. It was, 2021?
Yep.
Buffett named Greg Abel as the successor.
Yep.
And he's been at the company for a while now.
Since 1999,
Yeah.
has been his entrance. So his story, he used to work for a company called Cal Energy back in the 90s. And it was acquired by another energy company, which Berkshire then later acquired themselves. Buffett then installed Abel as the CEO of the energy company called Mid-American in 2008. And then from there, he's essentially climbed the ranks within Berkshire. He's the chairman and CEO of Berkshire Hathaway Energy, which I guess is the division that controls all of their energy investments. And he's the vice chairman of the non-insurance operations at Berkshire Hathaway, and has been since 2018. For those unaware, Berkshire is really an insurance play, has a huge insurance business, which is looked after by another guy,
Ajit Jain,
yeah, who will still remain as the leader of the insurance business when Greg steps up into his role as CEO of Berkshire. He's on the boards of Kraft Heinz, Nuclear Electric Insurance Limited, and a number of other companies. But has been, I guess, the Buffett protege, so to speak, or has been, Buffett has been working towards this for the last few years. But Ren, for me, huge shoes to fill, if only from the quips that Buffett has at the AGM.
Yeah. Well, okay, so over under, Buffett for his AGM fills a basketball stadium, 40,000 seats in Omaha once a year, and holds people's attention for 8 hours as he just answers questions. Over under, how many people will Greg Abel attract? 10,000 is your over-under. Under, you reckon?
Yeah, I reckon, unfortunately, this will be the end of... Without Buffett there, it will be the end of the Berkshire Hathaway AGM conference as we know it.
Definitely, yeah.
And I think it'll probably migrate to... eventually migrate to a larger conference centre and not a basketball stadium.
Fair.
Which, I mean, this guy's been around for 60 years and has been such an inspiration to so many.
Buffett,
Buffett, and has made so many retail mums and dads retirees multi-millionaires. Yeah. So that there's obviously a sense of pride, in excitement seeing him in real life. But real. Not to say that Abel is not able. But doesn't have the same gravitas, that's for sure.
Yeah. But I think for me, the thing is, how does Berkshire continue? It feels like a lot of it is set up to continue. Yeah. So the whole, the insurance operation is obviously going to continue with the G, and then a lot of the wholly owned businesses will continue to do their thing. It's not like Buffett was involved in their day-to-day. No. The question will be use of capital going forward, and there's Todd Combs and Ted Welcher who are brought in to be Buffett's, I guess, stock picking proteges, the investment managers, and that's really where the question will be. It's all this cash and profit that the conglomerate is generating. What will it do with that? Will they make the great investment decisions going forward? But, they've got $340 billion of cash on their balance sheet already. So it's not like they've been highly active with their investments. Yeah. And so that'll be the question going forward. You would think over time, this is just my theory, that that there will be some agitating to get some of that cash out of the company by investors and stuff like that.
Definitely.
But that will be, years down the line.
Yeah, I mean, it's pretty normal for a new CEO to come in and want to affect some sort of change within their tenure, make some sort of statement. Whether or not, how soon he does that, he's not going to come out and be like, let's deploy 300 billion, but...
Yeah, I still... my theory, which, you don't see widely discussed, is that they're preparing to do the ultimate buyback of Buffett's shares.
Yeah, but he has very recently, I think, at the AGM, reiterated that he's not selling a single one of them, and it's all going to be dripped out, given away when he retires his stock.
Yeah.
So I love that theory. That would be awesome because I'm a shareholder. But I think he reiterated that his plan is to not sell any.
But when he dies, is what I'm saying.
When he dies, that's his
okay.
plan. Yeah. It's all going to sit there and be donated to X, Y, and Z.
Fair enough. All right. Well, look, we will continue to watch this space, but it's a sad day when Warren Buffett retires. But I think well-deserved retirement. Let's take a quick break here. On the other side, we're going to answer a question around the tools and resources we use to invest in stocks.
Let's ask the community.
Hey, Equity Mate.
I just had a question.
Hey, Bryce, I've got a question.
Answered.
Have you ever wondered what research tools we use to invest here at Equity Mates? Well, in this segment, we're going to go through what we think are the best. And Ren, this is a question that has come in from Luke.
Hey guys, I've just found you and I've just got a general question. What are some online tools that I could be using to start developing my education in what I call traditional finance? I come from the crypto space. That's how I've gotten into this. I'm used to drawdowns and I just see crypto as a long-term thing despite the volatility of it. But I'm also just wanting to get into the ASX a bit more, international shares. I'm not sure how I can connect it through ComSec. That's a brokerage I use, high fees, whatever. It's just convenient for me because it's connected to my bank. But that's ultimately what I'm looking for. I'm looking for online tools that are kind of well used or well known for Australian investors that I can use to help kind of trade and invest in the ASX or Australian exchange, and then expanding out into America once the kind of volatility and everything there has kind of settled down. Cheers, guys.
Well, a big thank you to Luke for his question and recording it as a voice note. Remember, if you want to ask a question, the link is in the YouTube description or the show notes. We'd love it if you left it as a voice note. But Bryce, I think, Luke sort of is asking about tools and resources. He also mentioned brokers there. We've done plenty of content on brokers before, and I think these days the majority of brokers are giving you access to Australia and the US.
Yes.
So I think that's probably ground that we've trodden on a lot. Anything you want to say about brokers?
No. I mean, if you're just starting out, no. I think what we will do is link an episode from our Get Started Investing podcast in the show notes where we go through some of the best brokers that are currently available. How does that sound, Ren?
Sounds good. But then the question is, all right, well, I've got the ability to buy stocks in the US, stocks in Australia, all those ETFs as well, but how do I navigate this world and decide what to invest in? So I guess we've kind of got a toolkit or some of the key resources that we use. So let's start. How do you keep up to date with what's happening in markets day to day? How do you keep your finger on the pulse?
It starts at 6 a.m. Ren, when I open the Equity Mates daily newsletter.
Oh, nice. Okay. Shameless plug.
Toot our own horn. Of course I have to if you're not signed up. But genuinely, that's a good place to start. But immediately after that, 3 newspapers for me: Wall Street Journal, New York Times, AFR.
Okay.
I like the Wall Street Journal and the New York Times first thing in the morning because it gets me up to date with what's going on broadly in America overnight.
Yep.
And then, of course, the AFR with everything that's going on here in Australia. So those are my sort of 3 finance-based newspapers.
Yep.
But luckily, we condense all of those into our newsletter.
Yeah, lucky, yeah. Financial Times also great. Capital Brief in Australia, trying to unseat the AFR in the business section.
Yeah.
So yeah, there's some good ones there. But yeah, I think for me, I agree. It's read broadly, try and keep up to date with what's going on, and I guess discover companies that are interesting.
Yes. Yeah.
Then I guess the other way to find companies is, I guess, to try and take rather than like a news approach, like I guess a market approach. What's happening in markets, what companies are moving, and then like what, based on like the numbers they're reporting, who are reporting interesting numbers. And that gets to like, how do you screen the market?
So there are a couple of screeners that we use. The first is Ticker, Tikr. We'll put a link in the show notes to all of the platforms that we discuss. They're really good at, I guess, company information. You can get everything from their financials through to transcripts, but you can also screen global markets based on specific quantitative measures.
Yeah.
So we find that's really helpful. The second is Guru Focus. It's probably a little bit more detailed and provides a lot more data and information. It is both of these. It is paid. I think Ticker has a free option, but Guru Focus is just a little bit more comprehensive.
Yeah, I think it's more comprehensive and more expensive, so it just depends on which one you want, Ticker or Guru Focus. But yeah, I think if you want to start screening on companies that are oversold or have a good share price momentum, so you can start screening on, I guess, those market indicators to try and find companies that are interesting, or you can look at companies that are growing revenue or growing profit and stuff like that. So I think screening the market would be the other way to start looking for opportunities. I guess the third way is like, what are other investors buying or selling? And there's a few resources to keep your finger on the pulse of what other investors are doing. I think Twitter remains a good source.
Yeah.
Highly recommend change your tab to following rather than for you. Then you get the tweets of people you've chosen to follow rather than what the algorithm is spitting out. We've spoken about Reddit before. There's a subreddit called Security Analysis where they every quarter aggregate all the investor letters that are publicly available. And that's always an interesting read to see what professional investors are looking at, what they're buying, what they're selling. And then, there are platforms like Livewire here in Australia where you can get a sense of how Australian investors are buying and selling. We should also give another shameless plug to the Equity Mates Facebook discussion group to hear how everyday Australians are approaching the market as well. So that's probably, I would say, idea generation is probably 3 key buckets. What's making news, what's moving markets, and what other people are talking about.
Yeah. So that's idea generation. I guess the next step down, Ren, is then going deep on individual companies and finding information that way.
Yeah. Well, how do you
Doing
turn
your
an
research
idea into an
investment?
Yeah. And for me, like the first port of call, every investor we speak to on this podcast says the same thing, which is like, start with the company's own information.
Yeah.
And so you go to the investor relations website and you can read annual reports, you can see shareholder presentations. But another really, I guess, underrated resource is the company's earnings calls. And there's a platform called Quarter that is essentially like a podcast app for companies' earnings calls. And you can listen to any earnings calls from almost any company around the world for free. You can also follow along with any slides that they've got.
Yeah, I mean, we've been lucky to witness the growth of this company. They started around a similar time to Equity Mates. They say they're now the best-in-class AI-powered research platform. But it's pretty impressive what they can do now with their transcripts. You can get sentiment, you can search based on company and it'll pull up every transcript that mentions that company.
You can also search based on topics. So like if you wanna see like tariffs, and then you can look at like the most recent earnings calls and they'll across different companies, I'll be like, here's where tariffs were mentioned.
Yeah, it's pretty amazing. So definitely check that out. Again, we'll put a link in the show notes to that.
So those are some resources to start forming a view on a company that you're researching. You can supplement it with other articles written about those companies. Valuation then becomes, is it a good time to buy? I think Guru Focus, we mentioned it earlier, they've got some good valuation tools if you want to start thinking about that, or you can obviously do it yourself. But really that's sort of the process that we go down if you want to find ideas and then research them. There are obviously some shortcuts you can take as well.
You can get just research reports. There are plenty of them out there. I guess created by fund managers, research houses, or the like, where they'll just send you. Motley Fool is a good example, probably one of the more well-knowns. You pay a subscription and they'll send you stock ideas.
They still haven't found the next Amazon, but
next Afterpay.
oh, sorry. In America, they're advertising this next Amazon.
The next Amazon.
Here, it's the next Afterpay. Yeah.
So one we speak about here on the show is Good Research. Luke Larrative at Seneca Financial Solutions. He sends a couple of stocks a month, but there are plenty others out there as well.
Yeah. And then when it comes to tracking your portfolio, there's really two platforms in Australia. There's ShareSite and there's Navexa.
Yeah.
You're a ShareSite operator?
I am, big time. Yeah, I think they do a very good job. Has all my portfolios in one, cash, everything. You can just put it all in there to get a good sense of how your total net worth is tracking and performing.
And then, so they're the main tools we use, but we wanted to do a final category, which is in keeping with the times, AI.
Yes.
How does AI fit into this? Are we using AI in our research process?
Definitely. I think obviously ChatGPT is very helpful. We've spoken on the show about Notebook, one of Google's options where you can throw in up to 50 documents and get it to analyze those documents how you please. But one that I find pretty helpful, Ren, for stuff that we talk about on the show is Perplexity. It's essentially a glorified Google, but they do a really good job at, searching web and presenting information, factual information. It doesn't sort of hallucinate as much as some of the other LLMs.
So why do you like that over, say, a ChatGPT?
Because everything that Perplexity spits up will have a source next to it, whereas ChatGPT isn't at that stage yet of sourcing everything. It still does more true sort of large language model, responses, whereas Perplexity will only respond with what has been sourced from a third party.
Okay.
So for things like give me the performance of the S&P 500 every year for the last 30 years, it does a better job at that than ChatGPT at the moment.
Nice. Okay, so that is, I guess, a summary of the tools we use. Luke, I hope that answers your question. Plenty to go away and explore yourself. We include a lot of those links in our show notes, so you can check those out. But that'll do it for this episode of Equity Mates. Thanks for watching or listening. Make sure you're subscribed wherever you are so you don't miss another episode.
We'll be back in your ears tomorrow with an interview with Tony Crescenzi from PIMCO, one of the leading fund managers over in New York, to get an insight on all things fixed income. So stick around, but Ren, we'll pick it up next episode.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.